What if the secret to consistent trading success isn't hidden in complex algorithms or whispered insider tips, but on a chessboard? Imagine a quiet room, a chessboard in front of you. The pieces are perfectly arranged. Across the world, thousands of traders are staring at flashing candlesticks, chasing patterns, watching numbers jump every second. On the surface, these seem like completely different games. But beneath it all, they are strikingly similar. Both demand foresight. Both demand patience. Both demand the ability to stay calm when every instinct is screaming to act. Chess is more than a game. It is a strategy made visible, a system where every move matters, where each decision shapes the outcome of the entire match. Trading is no different. Every choice you make, entering a position, adjusting a stop-loss, holding onto a trade, affects your long-term outcome. Just like a chess player, a successful trader is constantly anticipating, calculating, and preparing several moves ahead. Think about it. A grandmaster doesn't just react to the opponent's last move. They are already envisioning possibilities 5, 10, even 20 moves into the future. Similarly, trading isn't about reacting to the last candle that formed. It's about seeing the larger structure, the hidden patterns, and the forces that are quietly shaping the market. The moment you understand that, everything changes. In this session, we're going to explore how the principles of chess, from openings to endgames, from positional play to psychological mastery, can transform your trading mindset. By the end, you won't just look at charts differently. You'll think differently, you'll anticipate differently, and you'll approach risk and reward with the calm precision of a grandmaster preparing for a championship match. Every chess match begins with the opening. Every trade begins with analysis. But here's the first lesson. The opening is not about memorizing moves. A grandmaster doesn't just memorize sequences. They understand possibilities. They visualize how each move influences the entire game, not just the immediate next move. Now, imagine a trader staring at a chart, frantically scanning indicators, drawing lines, and chasing signals. The trader reacts to every spike, every candle. Yet the market continues, unpredictable and indifferent. Why? Because charts show what has already happened, not why it happened or where it might go next. Chess teaches us that you can't win by reaction alone. You win by anticipation. A strong opening sets the foundation, but without strategic foresight, it collapses. Similarly, in trading, understanding the broader market context is more important than obsessing over short-term signals. It's about asking, what's driving this market? What are the hidden forces behind this move? Is this trend structural or temporary? Let's illustrate this. Imagine a chessboard with pawns controlling the center, knights positioned to attack or defend, and rooks waiting for the right file to open. Every piece has a purpose. Every placement is intentional. Now translate that to trading. Each position in your portfolio, every open trade, and even the timing of your entries and exits should be intentional. Random moves lead to random outcomes. Control, positioning, and foresight lead to consistency. The grandmaster's opening is not flashy. It's disciplined. It's controlled. The master prepares, studies, and visualizes the board. As a trader, the lesson is simple. Don't just focus on charts. Study market behavior, understand the psychology driving participants, and anticipate multiple moves ahead. The opening is just the start. True success comes from seeing beyond it, from building a framework that allows you to navigate uncertainty with confidence. In chess, not every move is an attack. Some moves are subtle, almost invisible, but they shape the game entirely. This is called positional play. A grandmaster positions their pieces to control the board, limit the opponent's options, and prepare for future combinations. They don't react to the last move. They position themselves for what comes next. Trading works the same way. Many traders focus only on immediate price action, trying to catch the next breakout or the next candle pattern. But mastery comes from understanding the structure of the market, seeing the underlying trends, identifying support and resistance, and knowing how positions influence future possibilities. Positional thinking in trading is about long-term control, not short-term thrills. Consider this illustration. A chess player slowly maneuvers their knights and bishops, establishing control over key squares while sacrificing immediate advantage. Meanwhile, a trader identifies the key levels where the market has repeatedly reversed. They patiently place trades or set alerts, knowing that the big move often comes later, when the market reaches a structurally significant point. Both the chess master and the disciplined trader are preparing in advance, building positional strength that will pay off in the long run. Positional play also requires patience. In chess, an early blunder can ruin years of strategy. In trading, jumping into impulsive trades or reacting to noise leads to the same result. A grandmaster understands timing. So should you. Trading is not about constant action. It's about calculated action, based on context, structure, and probability. By adopting positional thinking, you start asking, where is the market vulnerable? Where are the key levels? How can I place myself in a position to benefit when the structure unfolds? This is the essence of strategic foresight. It's not flashy, but it is the foundation for consistency and control. Chess and trading share a critical stage, the endgame. In chess, the endgame is where precision and calculation matter most. A single misstep can turn victory into defeat. Grandmasters don't just play the present. They visualize sequences, assess probabilities, and determine which sacrifices are acceptable. Trading requires the same mindset. Each trade has risks. Each position carries potential reward and potential loss. Calculating these probabilities before taking action separates a consistent trader from a gambler. Stop losses, position sizing, and risk-reward ratios are your pawns and knights, tools that protect the king, your portfolio, and your mental capital. Imagine sacrificing a pawn to gain a strategic advantage later. In trading, this could mean accepting a small loss to protect your capital for a better opportunity. Endgame thinking means seeing beyond the immediate result. It's about sequencing moves, controlling exposure, and understanding that no trade is perfect, but every trade can be calculated. Grandmasters remain calm under the pressure of a ticking clock. Traders must do the same when markets fluctuate violently. By assessing risk, planning for losses, and understanding probabilities, you reduce emotional decision-making and increase strategic consistency. Like chess, trading is not about winning every move. It's about maximizing long-term advantage. Chess is as much a mental battle as a tactical one. Under extreme pressure, emotions can cloud judgment. Fear, frustration, impatience, overconfidence. These invisible forces often determine who wins more than any tactical combination. Grandmasters know this and train their minds rigorously to stay calm and objective. In trading, the same pressures exist. Markets fluctuate unpredictably. FOMO tempts you to chase, panic tempts you to sell, and frustration tempts you to revenge trade. Without emotional discipline, even the best strategies fail. The chess master remains calm under the ticking clock. The trader must remain calm under flashing candlesticks. Techniques like pre-trade routines, journaling past trades, and stepping back when emotions rise are mental training tools. They ensure that decisions are deliberate, not reactive. Emotional control allows you to execute your strategy consistently, rather than being swept away by market chaos. Think of a grandmaster visualizing several moves ahead while keeping their breathing steady. Now picture a trader calmly reviewing levels, assessing risk, and waiting patiently for the ideal opportunity. Both understand that composure under pressure is the true determinant of success. So, what does this all mean for you? Foresight, positional thinking, risk management, and emotional control, these are not abstract concepts. They are actionable principles. By applying them, you train your mind to think strategically, anticipate patterns, and act with calculated precision. Start small. Apply one principle at a time. Practice anticipating moves, understanding market structure, calculating risk, and staying calm under pressure. With consistent effort, these habits become second nature. Your trading will evolve from reactionary to strategic, from emotional to disciplined. Every chess master began as a beginner. Every trader begins with a first trade. What separates the masters from the rest is mindset, patience, strategy, and mental resilience. Think of every trade like a chess move, deliberate, calculated, and purposeful. Position yourself for long-term success. Control what you can, prepare for what you cannot, and move with intention. Because in both trading and chess, every move counts. And the greatest victories are reserved for those who think ahead, act with purpose, and master themselves before the game. Are you ready to think like a grandmaster?